Donald.
Morning, Donald.
Having a great day. I know you're still not quite feeling fully up to par. And me, I've been sitting here. I wasn't doing trading stuff. I was actually scanning all of my wonderful tax documents. It's part of that. So Richard Paul, my
Yeah,
CPA, if you happen to catch this podcast, then hey, I'm working to get you the stuff, dude. So it's just it's what we have to do, right?
exactly. Yep.
So some of my enterprise stuff I can have somebody else do, but some of the smaller stuff I have to do. So
Right.
all right, so let's get into some fun stuff here. So what we wanted to do is, like yesterday when we were on, I said, I'll share some other trades. I actually never had a chance to do another trade yesterday.
I was going to ask you if you got that done. Yeah.
Yeah, I know. I was going to do that one, and there's so many things going on right now. So what I'm going to do now is see if we can find a trade that makes sense and jump in. So I'm set to go, but I have not even marked up my charts. So we're gonna mark up some charts. We're gonna make some decisions, and if there's a good trade, we're gonna take it. All right. And usually there's a good trade in one of the pairs that we like to work
Correct.
with. So I will say I'm going to start off with gold first. I was had a great conversation with a gentleman. I'm on the board of directors for one of his companies, or for his company, I should say. And we were talking about gold and silver and where the market is going, and what to jump into and why. And so it was interesting. But this stuff never seems to leave. It's like part of our lives, right? It really
Now,
has become that way.
and when you say jump in, there's a difference because there's traditional jump in where people think they're going to buy some gold or buy gold coins or bars and store them and have them. And we're not taking possession of any product here.
Well, not 100% true. On what
Okay.
we're talking about here, that's correct. But I definitely have taken possession of the
No, I meant here and what we're doing in trading right now.
yes.
I meant the other.
And I'm always looking at where can I, if I can expand my personal holdings, right? So
Right.
most of what I'm doing from an investment standpoint, other than stuff I hold like crypto and I know Mike and I talked a little bit about this, and I know you and I have talked a little bit about this with XRP in particular, because XRP is probably it is my single largest crypto holding. And then the second from me would be Bitcoin.
Right.
So, and I used to have a fair amount of Bitcoin, but I sold it when it was way too low, long time ago. But that's a story I've told before, so I won't go into it. But let's look at gold, and I'm looking at, all right. So we're in this current candle. Let me go to the 1 hour. All right. So on the 1 hour, we're on this candle, and you can see, by the way, this was a good call from Einstein.
Right.
This morning, Einstein called this as a sell, and look where it went all the way down to TP2, and even went down lower. You could have stayed in and made TP3 on that one. So and even kept going lower, although the market was changing. So this would have been a good time to that TP3 would have been beautiful.
Mm-hmm.
And just out of curiosity, by the way, I want to see what that amount is. So going to TP3. Wow. That would have been nice. Nice. So that would have been, so that's $37 in the price of gold. So depending on what you did, so if you did, let's say 0.01
Correct.
for a lot size, which is the smallest lot size you can do, that would have been $37. That's not bad,
No.
right? If you did a lot size of 0.1 instead of 0.01, that would have been $370. 1.0 would have been $3,700. So when you think about those numbers, it's like, okay, and I know I'm sort of repeating this, but this is this is an important piece. When you learn how to trade and get comfortable with, you never want to get fully comfortable, by the way, because you don't want to just, you don't want to get cocky. You just don't want to you always want to always be on guard, right?
Exactly.
Protect
Yes.
your assets. And by the way, folks, we're only sharing stuff with you that we're learning. We are learning though, which means this is not this is not financial advice. Anything you catch here, it's stuff that we're learning as we go, and we've got a lot more lessons to learn. So we're not making recommendations to you. We're just telling you, we're documenting our journey. That's all we're doing. All right. So if you happen to jump along with us, great. If you want to jump on the quest with us, awesome. We'd love to have you, and certainly give you a chance to get all of the training from a master trader, Donnie Pips, not us. All right. But here we're gonna document it, and so you're gonna know how long it takes us to get from $250 up to $1 million. All right. So you'll see it. And you're going to see those trades, or some of those trades, anyways. Some like Mike's a trading animal. I mean, he'll do. So sometimes he'll do 10, 20 in a day, right? Me, not so much, right? I might do 1 or 2 or 3 a day, depending on my availability. Sometimes none, right? Just because of my schedule. But that's
correct.
It's all part of it's my journey, right? Mike's got his own. You get your own. Everybody has their own.
Now, Mike is away. He's on vacation with his family.
Yes.
He did send us a group text. I don't know if you saw it, but he's done some trading this morning. He had to pick somebody up at the airport, so he's not going to be on our call again this morning. But he was trading, and he talked about a couple of trades that he had, and there was an E3 trade where, 3 of the indicators, came up and crossed. I don't remember what it was on there, but he's on an island in the Caribbean, and he's still earning some money today.
Isn't that great? You're able to do it on vacation, and it's not like it takes a long time.
Correct.
Right. You make a decision based off of information, and then you take the buy, you take the sell, whatever it is. But you do want to research it first. So I know Mike's up early, so he gets up before everybody. He'll do his charting, and he's ready to go. And so when he finds something, great. And that's one of the great things about Forex. You can be trading it almost 24 hours a day, 7 days a week, almost. And I think technically you can do it 7 days a week if you're looking at crypto and some of the other things, some of the stuff that never stops moving, right? So you can do those types of things. But let's look at this. So this is a great trade that Einstein called. I'm going to take Einstein off for a minute so we can chart this. And so there's a few things I'm looking for here. So the first thing I'm looking for is a level of what we call a supply zone and a demand zone, right? And I've been talking a little bit about those. So above where the market is going to be a supply zone. And what I'm looking for is a candle, a bullish candle, so this green one, that's followed by a bearish candle that's more than twice its size. And that's exactly what I found here, which means, just to put this here, this is a supply zone. And that's a perfect supply zone. And why this matters, right? So when you've got a bullish move, meaning it's going up, and then you've got a bearish move that's substantially more and turns the tide of it, that means that there's a whole bunch of buyers here. There's a whole bunch of sellers here. People that think gold needs to go down or gold is going down. And so they're jumping in on the sell. And buyers are jumping out, right? So that's why the market turns. And I'm keeping this pretty simplistic. This is sort of how I grasped it from Donnie Pips. So this is interesting because as you look at the zone, what you've got is a front wall, which is over here, and you get a back wall over here. And everything I learned, I learned to teach. So I'm really, because And I recommend that to anybody. If you're going to learn something, learn it so well that you can teach it. I don't know this all yet, but I want to learn it so I can teach it, because then it's really, really ingrained, right? You got it good. So this front wall has held. It held this candle. This candle didn't break it. The wick didn't even break it. Now this one did. It went in, but it came out. Again, there's sellers here, okay, in this zone. And so you get the front wall, you get the back wall. Usually when I'm taking a trade, if I believe it's going to bounce down, I'm taking off the back wall, all right back here, because I want to get the most move, and I want to be sure, because as it's getting close to that back wall, I'm looking at some other indicators, okay? And so I watch that. It's not always 100% right, but if you're right 70% of the time, 80% of the time, and your trades are all even, you're going to be very profitable.
Right.
So when I look at this, so I've got my bless you. So now I'm looking for a demand zone. Demand zone is at the bottom, it's below where the market is. And so I'm looking for a bearish candle that turned around and is followed by a candle or candles that are double its size or more. And I certainly have this here. So this right here is my demand zone. Very clear, very nice and neat. And I change this to green. So this is my demand zone. Let me make sure that that's all the way. I want to, it's another thing. Donnie Pips is very particular. I'm not talking about me in the third person here. Donnie Pips is very particular. I used to be called Donnie when I was younger, right? As I was growing up as a kid. And then my son, who's also named Donald, he's not a junior, but he's named Donald. And he took on the name Donnie. So he's still Donnie, even as an adult now. He's off in Canada, just got married this past year. And but he's still Donnie. Me, unless it's somebody that's known me for a very, very long time, I'm Don or Donald in some cases. But this is a great zone. So we've got two solid zones. You can see that this particular zone, let's watch what happens, right? This candle is coming close to that back wall. Will that back wall hold? So if you look over here, that back wall pretty much held over here. Then everything changed. Everything came down. Went all the way down here. This back wall over here held, right? Then it goes up. And right now, so let's zoom out here just a little bit. And so we've got, so it looks like it held again. And that would have been, by the way, that would have been a great place if I was going to take a trade right then and there and I was ready and I looked at other indicators and I thought it was good, then I would have taken this down, because this is going to do one of two things. It's either going to come back down and probably come into the zone, or at least get close to that front wall, or it's going to go up. We've got 30 minutes left in this candle. So we don't really know what's going to happen here yet.
And yet we haven't looked at any of the indicators also to see.
Say that again?
We haven't looked at any of the indicators to see where it's going to go. Like if we wanted to make a trade on it.
Right.
We haven't analyzed it yet.
Right. And that's why it's like, I think it's going to come down, but I didn't want to take the trade because I haven't looked at those things. So that's where, like I said, Mike likes to get up early. He'll go do all of his markups and he'll take a look at it, which is a great practice. And he's looking at everything around. All right, where are things? What's happening? So like I said, typically this is going to bounce off of here and it's going to come down. So let's see we'll watch what happens. We'll actually come back to that. All right. And
that's one of the things that Donnie Pips brings up in terms of, doing your charts, getting up and being prepared. It's like doing your homework, but here you're not getting a good grade. Here you're getting, a profit. So there's more incentive to doing your charts ahead of time. And doing that homework and being set and ready to go, so that when you get when you see a potential trade, you're ready to go and you can do it quicker and analyze it,
Yeah.
faster because you've prepared.
Yeah. And I mean, realistically, whichever time you do it, it works because you're able to, is another one down here, just another zone. I like to look at that because when it's coming down, like, okay, if it does break through this, where is it going to go? I want to know that next spot, right? So, but because we can trade just about 24 hours a day, 7 days a week, and 7 days, like I was saying earlier, that's if you're going to do crypto and stuff like that, you're able to trade over the weekends. That's a pretty cool thing. So now, some of the other things that we'd look at before we go to another pair would be, let's say, well, we just put Einstein on for a second here. The 200 moving average. That's a big one for me because the 200 moving average is usually a good, strong reject line. It either rejects it back down or rejects it up, depending on where, for instance, if this comes down and hits the 200, the odds are good it's going to push back up. This is a point of resistance. Another, although not as strong, is the 20 moving average, which is the blue line. And then we've got the red line down here. But here's an interesting thing. We talk about an E3 cross. And Mike likes to talk about those a lot. Donnie Pips talks about those a lot, right? Mm-hmm. What we're seeing right now, so we've got yellow on the top, this red on the bottom, and the blue is about to cross. I'd say probably somewhere around here, right around 1 o'clock or so, 1:30, 12:30, somewhere in that range. It's going to cross over, and the 20 moving average, that's if this continues, is going to be higher than the 200.
Right.
Okay. And that's if this continues to go up. The next thing that you're seeing is the 66. The 66 down here has now made that turn. Those are signals, especially once this crosses, that the market's going up. All right. It's a lagging indicator, really, if you think about it, because the market has to go up in order for those things to happen. But usually it's indicative of a trend. And so, those are some of the things that we'll watch for. And it doesn't always happen that way, but that's what we're looking at. So the next thing I look at besides the 200, the 20, and the 66 is I look at the RSI. What's happening with the RSI? Like the RSI is the purple line down here. And we get the yellow line, which we like to call Jerome, but it's basically the 10. And so when we look at the purple line here, we're saying, okay, what is this really doing? Is this purple line, the RSI, the relative strength index, is that above Jerome or below Jerome? Right? Is it battling Jerome? Is it bumping against it? Right now, it broke through. The fact that this broke through Jerome and we're also seeing it up here means we're probably on a good uptrend. I could probably take a buy on this knowing it's going to go higher. However, how much higher?
Right.
So the next thing I do is I look at, okay, well, I don't have anything directly to the left, so I got to go further out. Where is my next supply zone over here? So there was a supply zone here. Yeah, that was the last one. So there's,
correct.
And that's a pretty big drop too. I mean, it changes to supply zone. So this is, all right. So I don't have another zone above unless I go much further. Wow. So the next one will be up here. All right, so let's look at this one. This is another big one. So we got a bunch of zones. And so if I go back to here, where we are today, right now, and I'll take out Einstein for a second. So you've got this candle that is certainly in this zone, piercing it, has not gone through this zone. And just like these candles over here, this is held. Mm-hmm. But the RSI is pointing up. So there's a good chance that it is going to continue a little bit higher, but there's a whole bunch of resistance here because there's sellers here. This seller's up here. This seller's in here. So could it blow through that? Yes, but I'm not anticipating that really happening just yet. Or I wouldn't feel comfortable, put it that way, right? I would not feel comfortable taking a buy right now and thinking I'm going to make a ton of money. Right. I would take a buy maybe a little bit higher if, taking up a little bit if I was just going to do a really short trade and just get a few dollars. But there's just so much resistance up here and people that want to buy, people that want to sell, that I'm not confident that that's going to go far. Does that make sense, Stephen?
No, yeah, it's a larger zone than you typically kind of see.
Yeah.
So,
and we've got 21 minutes almost left in this candle. I want to see what this candle does.
Yeah.
All right. Does it close in this zone? Does it close in this zone? Does it close below? And this holds. Right. Now
again, and I'm interrupting. I'm sorry.
Go ahead.
Watching it because you're seeing what's there. So it's giving you, once again, more knowledge of what can happen. Does it happen every single time? No, but the majority of time when the indicators indicate it's going to go, up or down, it does go that way.
Yeah.
That's what we're finding. And that's why we're here, because each of us have come across that independently. It's like, okay, if I follow the indicators, I can be very successful.
Right. And there'll be times when you'll be like the other day on that Euro USD trade, I was very confident that I was going to go down.
Yeah.
And it went down a lot.
Right.
I was good with that trade. This trade, I'm not as confident. And so I'm not going to take it. So what I'm going to do is I'm going to go to a different pair and take a look. Now I could go down. I could look and see what's really happening. Right. I know it's coming down here. So if I went to the 3 minutes, it's going to be red. Right. I can see that. I went to the 1 minute, same thing. 5 minute. 15 is still red. Okay. But the 45 in the hour, in this past 45 minute cycle, which is 19 minutes left in, it has moved up. Right. Again, if you go to 30, well, we're 18 minutes, almost 19 minutes left in this 30-minute cycle, right? And in the past, call it 12 minutes, 11 minutes, it's started coming down, right? So again, I think if anything, it's going to come down, which was my plan before, that it would reject and come down this way. And that's sort of that helps me to think that is the case as I go back down different time frames, but I'm still not 100% sure.
Right.
So what I'm gonna do is I'm gonna go to the British pound and Japanese yen, and I'm gonna remove my old charts, and let's take a look at this. So what do we have here? So we definitely have a zone here, a supply zone. Again, it's above where we are, but a supply zone is where we had a turn, right? So it was bullish and it turned bearish by more than twice. Okay.
Right.
And this was pretty close, but this would have been a demand zone if it was below. So can't count that one. So the next zone that I've got that's close to where we are, if I keep going back, I like to look at the most recent stuff. But let's see. Yeah. You've got maybe here. I'd have to measure that one. But that's it. You know, and I could keep on going back. So this is where I'm putting my demand zone. I mean my supply zone. Let's look for demand zone. So again, demand is the opposite way. So you get a bullish candle followed by a bearish. A bearish one followed by a bullish one that is twice its size. Now that's not the case here, even though I can string these three together, these closed candles. So where is the next one? So we're right here. And quite frankly, we're right here too. Right where the market is right now. I want to mark up that one too. So this is different just in comparison. We were just on gold and those zones were pretty thick, pretty big zones.
Yep.
Right? Here, these zones are not too thick. But remember, gold moves a lot and it can move fast. Whereas the other Forex pairs don't typically move as much. So you're not going to see the wilder swings in the same period of time, typically. Not always, but typically. So I'm looking at this, I'm saying, okay, well, where are we right now? Well, the market is right here. It's hitting the back wall. And we'll see, you know, what holds there. But I'm also looking down here, the RSI and Jerome battling each other. So we got a back wall battle. We have a Jerome battle. And who's going to win that battle? We'll see. Let's see where the 200 is. Let me put in Einstein. Now, Einstein, by the way, called this buy. And it would have been a nice TP1.
Yes.
TP2. Mm-hmm. All right. But these two are battling right now. And so far, Jerome is winning. So if that's the case, this is probably going to come back down, but we'll see. And if you look, we've got yellow, which is the, or gold, the 200 moving average. You get the 20 moving average and you get the 16. So I'm looking at this, I'm saying, okay, wait a minute. All of these are heading down. The trend is definitely down. Next week, I want to kind of get into fibs and talk about, no, we're not lying. We're going to talk about what a fib is, a Fibonacci. We'll get into that. But that's another thing, another tool that we'll use. But for right now, I just want to keep this really pretty simple. And this is what I'm looking at. I'm looking at zones here that we'll see what happens. We've got how much time? We're on the 1 hour. We got 13 minutes left in this zone, in this candle, I should say. And we'll see what happens. But the trend, even though we've got the more recent stuff is going up, the trend right now is still overall, I think, down. And I think that's what we're going to see. Now, I have not looked at news today either because, like I said, I was doing other stuff for taxes before I came into this. And I simply, I just started charting it here, right? So
I looked at news. There wasn't anything eventful earlier.
Okay. And I hadn't heard of anything, but again, I didn't dig in yet. So most of the time I'll go and I'll chart first when I do it. And then I'll look at the news and I'm also going to look at what's coming up, right? So when we talk about the news, that The news is the fundamentals. It's information that comes out where you could be in mid-trade, right? So the market opens, let's say in the US at 8:30 a.m., right? Or 9:30 a.m., I should say. And when the market opens, look at that, it's moving up. When the market opens, we're looking at, okay, what is the news coming out? And is that going to affect the market? Is it going to affect gold? Is it going to affect inflation? Is it going to affect the US dollar? Right? The US dollar is key because if it affects the US dollar, well, that tells us that it's going to affect the British pound compared to the US dollar, the Japanese yen compared to the US dollar, the
Right.
euro compared to the US, all of those. So if the dollar is getting stronger, then we're going to see those pairs coming down. If the dollar is getting weaker, we're going to see those pairs going up. Right? It's pretty, unless it's the UJ, the euro. I'm sorry, the US dollar, Japanese yen, because it's always based off of which one's first. So if you get the US dollar versus the Japanese yen, if the US dollar is getting stronger and the Japanese yen is getting weaker in comparison to the US dollar, you're going to see that moving up, right? But so let's look at that for a second, because that's a pretty interesting indicator. So US dollars first, then the Japanese yen. So if the dollar is getting stronger, this forex pair is going up. Or if the dollar is getting weaker, it's going down. But as soon as you go to Euro USD, it's the exact opposite, right? So if the dollar is getting stronger, then you're going to see, compared to the euro, all right, you're going to see this go down. If the dollar is getting weaker, you're going to see this go up, all right? Because the first one is the one that you're determining, is that stronger or weaker than the second, right? That's how I understand it. And please correct me if I'm wrong there, but that's how I understand it. And it's worked in my head. So if I look here, let's go to the dollar index for a second. So right now the dollar index is down in this candle, this 1 hour candle, right? So if the dollar is down, it's weaker. This is just the dollar index itself. So if the dollar is weaker and I go to the Euro USD, this should be going up. Where the heck? Oh, hold on here. Every once in a while this happens. I don't really know why it does, but I got to split it up. Here it comes. So you can now see it. So to my point, I said if I look at the dollar index, it's going down, then Euro USD did it again. Dang nabbit. It's the exact opposite. So come on, here it comes. I really am not sure why that happens. So like I showed you, the dollar, I'm not going to go back there just yet. The dollar was weaker. And so the euro, compared to the US dollar, was stronger. All right, so this is going up. And you can see it's a bullish candle, right? Euro USD. If I go to dollar, you're going to see it the opposite, right? So that's a great indicator. If you're looking at one, you say, okay, well, news comes out that means the dollar is getting weaker. I know I can go to Euro USD and probably take a buy. That's one simple indicator, because they're going to be opposite each other, right? Now you got to look at a lot of stuff. You can't just, because at the same time the euro could be getting weak as well, right? So you won't have as much of a move, or it could be getting decimated for some reason. And even though the dollar is getting weaker, it's worse, and it'll still go up the other way. But as a general rule of thumb, all right, that's what I'm looking at. What are the things I can think about that, all right, this is probably a good sign that I can take this buy, or I can take this sell. And that's what it comes down to. So those are things that if you would ask me about all of that stuff, I mean, logically that makes sense. what I just said. But if you'd asked me about that in, beginning of September of last year, I would not have, I would have understood that from a logical perspective. If one's getting weaker, the others would be stronger in comparison. But I would not have understood how it really affects all of this and what we can do with it. So that's why I just figured, as I'm looking at it, might as well share it, right? So let's go back, US dollar, Japanese yen. So again, the dollar was coming down. And so here, US dollar is coming down compared to the yen. So same thing. Now I like UJ as a pair to trade. So I'm going to mark this one up because I may do something with this as well today. So I see a nice little supply zone up here. Change that over to my supply zone. And again, that's because I have a bullish candle followed by a significant amount of consistent red bearish candles, right? So that's a great one. And then opposite right here. So I have down here, I've got a very good demand zone. So let me put this here. And so think about this one. If you look at these two zones, right? You get the back wall up here, you get the back wall over here. And what do we see? Once it went into this, it goes up, that back wall holds, comes down, this one holds, comes up, it's holding. So it's going in this channel, right? It's consolidating right now. So that's Euro USD. So I can watch this now. One thing that is sort of another indicator that I look at, which I mentioned, is the 20 moving average. 20 moving average right now has held on this candle, didn't hold on this one, all right? But it rejected and it went back up. Will it hold again? I don't know. All right. So I'm also looking at where we are with, we just had a cross here between the 66 and the 200. All right. So usually when we get the 200 below, then the 66, then the 20, we're in an upward trend. That's usually what we see. So again, always want to watch them. And this right here was an upward trend. But are we just going to bounce for a bit? Very well could. Okay. But this could be a good area to trade. Now, just out of curiosity, what is the range from this wall to this wall? 67 pips.
So what?
And what's Donnie like?
20.
So 20 pips to freedom, as he says.
Yes.
So we could take a third of this up or down at any time and pick up 20 pips, and there we go. So that this looks, unless some other news comes out or it's going to come out, this is probably one of the places I'm going to trade today, or I'm going to look to trade, because it doesn't move that fast. It's easy to make corrections, and you can predict pretty well on those trades. And then same thing with Euro USD. I do like Euro USD. So on Euro USD, let's take this one apart, and let me clear these drawings from before. I'll take out Einstein so it's nice and clean. And so here we've got a very small supply zone. All right, let me get that down a little. There we go. Now I can make it a little bit bigger just by moving that. But the next thing is, where's my level of support down here? Where is my demand zone? So I got to go all the way back here to find a point where it's lower. So I'm going to go here. Ooh, I'm liking this. So to come all the way down here, this is where my zone is.
Right.
Right? This is my demand zone. So I'm looking at this and saying, okay, I've got some good room there as well. So let me go back here. I had to go back a ways to get that. So there's some good room on this one as far as the zone. And I do have some others. If I go back, I can see that we've got another zone back here. We've got a zone back here. So there's some, even if I look at this one right here, let's just put a, just gonna put a ray here. Oh, no, I don't want that. I just wanted this. Hey. Oh, that's why. So as I watch this, I can see where the market is right now. So this is going to be a potential rejection point. It's also right around where the 20 moving average is. So there's a few good potential trades coming up. So I'm gonna look at potentially taking a trade on Euro USD on UJ, Euro USD Japan. And so those are the two I'm going to be watching along with gold. Always want to watch gold. And gold is still just bouncing in this range. All right, we've got 56 seconds in this candle. Will it close in this zone or not? So I'm going to close a podcast after this piece. But so I want to know if this is going to close in the candle, it flips the candle. Candle's technically green instead of red. But we've got 33 seconds. It could still close below, and that back wall and this front wall here could hold. So we're going to see. All right. So those are some of the things that we're watching for. But we definitely have some consolidation here, and we know our range. So unless something gets a little crazy, we can always pick up a trade within this range. And so hopefully this is helpful for you guys. All right, so 6 seconds, 4, 3, 2, 1. All right, so it flipped the zone. So this zone technically is green because there's some buyers there, but we'll see what happens here. Let me just see here. And this, by the way, I'm saying, it flips the zone, it does this, it does that. That is based off of my understanding of what Donnie has been training us on. All right. And I could be wrong. So that's why we're not making financial advice, not making suggestions here for you, but we're sharing the stuff that we're learning, and we're trying to do it live. So that way you can see, okay, what are we doing? What is it that we're really doing? And like I said, I'll be taking, my plan is to take probably 2 or 3 trades today, and we'll see, right? But I like Euro USD, the charts I've seen. I liked UJ, and I like gold today. All 3 of those have really good, clear places for me to get in and get out, depending on what I see with trends and other stuff. So,
and that's what Donnie advocates too, is just work on 3 pairs.
Yeah.
Versus multiples. And he does that because he finds that to be more successful.
Right. Well, you can get used to the moves.
Right.
For me, that matters because, like gold, I've made some good money in gold. I've also been burned in gold because it moves so fast. And if you make a mistake and it moves fast, you don't have a lot of time to catch that. Right. So, and usually when I put my stop loss in, I do that right away. But even though I've got a stop loss in, I put it outside of a zone. Like if I believe that this back wall is going to hold, I'm not going to put my stop loss there. I'm going to put my stop loss above it because I want to make sure that I get a little bit of room, because as you see, this wall right here, that's been holding, but they've pierced it. right? Didn't close in those areas. And this could end up closing down below this. This could end up coming down here. We're watching this, it's just sitting there, right? So the beautiful thing is, and I'm really thinking that this is going to come down and we're going to have we could pick up a few dollars there. Yeah, I think that's probably going to be my first trade. So once we jump off here, so I'll watch that because I'm also watching where we are on the RSI, although we do have Jerome right there. And if I go down to the 5-minute, it's below Jerome and it's pointing down. The 3 is pointing down. The 15 is pointing down, but pointing towards Jerome. So we could have some resistance there. So I'm pretty sure I'm going to take this one and take it down for a little bit. But with that, any last closing comments there, Stephen?
We're doing the cast here, the podcast, so that you can see how we trade and you can feel part of the community. And that's really the big feature here with the Build Academy and working with Donnie Pips, is that there's a community that we're trading in, and it helps build your confidence very quickly when you see other people that are just like you starting, and then you see people that are more advanced, but you also see that, you know, what they do and how they've learned to get to that point. So again, working in the community, you're not by yourself, and it helps you build that confidence quicker. That would be my key.
Yep, and I would agree with that. Definitely agree with that. So I did, by the way, I did jump into that sell. We'll see how we do there.
Yes.
And it's, you know, it's going to go up and down a little bit, but my plan is to take it down. I've got the 10 here. I've got the 20 coming up. This is going to be where I would have my take profit on the front wall. And my stop loss is going to be up here, right? Just so you all can see that. And so that's right here. 5031. And well, don't do that. All right, and by the way, I am in profit right now. I'm up between $2 and $3 right now. So just in putting that in.
Correct.
And I have a small because you don't see it here because I got rid of Einstein, and that's where I have my 200, but my 200 is right here.
Yep.
So I put my take profit right above the 200. So I'm almost in profit right now. I mean, I'm in profit, but I'm almost at my TP. And do I think it could go down further? Yeah. But, you know, that'll give me about, I'm going to say about $15 in hopefully just a few moments. I mean, right now I'm up over 7. So pretty simple, right? But it's really just understanding what should happen, and it's never a guarantee. And like I said, these are not recommendations. All right, we're only documenting what we're doing. This could flip the other way. It won't. I don't want it to, right? But I mean,
it may listen to you. Yes.
Right. But well, it may. But here's the thing, right? I don't know what I don't know. So we are not making financial recommendations to you. We're not telling you this is what you need to do. we're just documenting, right? So now I'm up over
Right.
8. It did jump pretty close to my TP, my take profit. But my take profit is set. So I'm just sitting here watching, and I'll take the whatever it is. I didn't actually calculate it. I always guess when I said about $15, it's probably going to be $11 or $12 where I have my take profit. But I'm pretty confident it's going to hit that, right? And so once it does, great, I'm out. No big deal. I could do that all day long, and if I'm right, 8 out of 10 times, 7 out of 10 times, I had a really good day, right? Um, so, but I'm watching.
Absolutely. Yes.
It's getting close. So, um, we'll see. I will record this one once it hits. I was thinking it might hit just before we ended the podcast, but that's okay. So, it's nice move. Come on, do it. It is fickle. So, but hey, listen, folks. With that, we will be back tomorrow at 10:15, and next week, and then we'll be off until next week, of course, because of the weekend. But Mike, we're expecting back sometime next week, and we'll go from there. So, have a
Excellent.
fantastic day, all.